Right, let's get straight into your markets news and speak to analyst Patrick Mathidi. He's the head of equities at Aluwani Capital. Thank you very much, Patrick, for joining us. It's been quite a tumultuous day also for the UK markets. Just explain to us what's happened there and how the markets ended up firmer yesterday.
Essentially, with the incoming new Prime Minister in the UK, Liz Truss, she had, two problems that she needed to attend to very urgently. One was rising inflation as a result of high energy prices, but also a protracted slowdown in the economy, stemming from the decision to get out of the Brexit sort of a situation. So what she then did in conjunction with the finance minister was to, on the one hand, lower taxes, but then at the same time, give further stimulus to the economy, in an effort to boost growth and especially help those who are massively impacted by the high energy prices. This is all happening in the context of high inflation and the need to hike interest rates to contain inflation. So that move of cutting taxes, it actually was counterproductive in the sense that it actually added the potential for further inflation and the need for further interest rate hikes going forward. So that contradictory in action pulled the UK market into a tailspin. We saw the bond yields doubling up over a few days, and also we saw the pound weakening quite considerably against all major currencies, including the dollar, which is about 20% lower yet to date. So yesterday, then we saw the central bank coming through and actually announcing to step in and try and stabilize the markets in the form of buying bonds to actually be sort of the buy of last resort, so to speak. And then that move, did to some extent stabilize the UK market, which also fed into the global financial systems in terms of providing some respite to what we have seen the few days before that.
So what's going to need to happen then? Because like you say, it is actually a contradictory move that the central bank has had to come in and buy bonds in, during a time when it's been raising interest rates. So it is a little bit of a confusing policy, but of course they've had to react because of the, the fall of the pound. So is it going to have to be that the British Prime Minister and the Chancellor are going to have to take a policy step back in order to save the situation, or because of political ego, they might not do it?
Well, I think that remains to be seen. We are seeing the political side of things, being the Prime Minister and then it's sort of the equivalent of Finance Minister, going the one way, but the central bank, being independent and being resolute in terms of its mandate on inflation. So it will remain to be seen as to which faction, so to speak, actually has the upper hand. The central bank or the Bank of England has actually come through and said they will announce in November when they see formally their next move. And most likely, the market is expecting them to actually continue to hike interest rates. But as you say, to be hiking interest rates in an environment where, on the other hand, you're actually buying back, is quite counterproductive. So the next few days and weeks, we'll see how that pans out. I'm sure there will be some political, sort of a settlement where the two have to come together and actually agree. We have seen unprecedented announcements from the likes of the IMF and even the Fed and Capitol Hill, where they are actually rebuking the UK for this move, which it clearly has had a pronounced impact on global financial markets.
Yeah. So global markets have really been pummeled of late, and we have seen a little bit of a recovery on Asian markets today, a slight uptick on the local market. Is this the beginning of something more positive to come, or more volatility?
I think this is probably, it's a bit of a quiet after the storm, but I wouldn't be surprised if there is still further volatility in the next few days and weeks to come. Let's not forget that on the political front, things are still very, very fluid, globally. With Russia annexing some parts of Ukraine, some talk of a nuclear attack. So anything is still possible, on that front, over and above what we're seeing on the economic front.
And then just quickly looking at company news before we run out of time, Capitec, they came out with their annual results. Just tell us what you saw as some of the key highlights there. Are they still doing well?
Yeah, I think overall they're still doing very well. This is a company that continues to grow at double digits, way ahead of their peers. If you look at the Big Four, a lot of that growth is being fueled by digitization. So if you look at the customers, I think it's about 11 million or so which is sort of a second highest compared to the other before, with a Standard Bank being far ahead. So they continue to gain market share. They continue to bring on new customers, and on the business side of things, they did. They are still growing, but I think what the market may be worried about is the cost line. So we are seeing costs run ahead, and I think a lot of those costs are actually investing for the future. But in an environment where the future is so uncertain, I suppose there are concerns that perhaps they may be over-investing with maybe those returns maybe delayed in terms of being realized. But net, it was a good set of results. It's a good little company that continues to grow well. And I think looking forward, there may just be some concerns as to whether that growth is sustainable.
And Patrick, lastly, of course, today we had some data out, PPI, producer price inflation, that slowed to 16.6% for the month of August, a bit better than the 18% registered for July on an annual basis. Do you think that this is a good turning point? Can we see that number trending downwards? And what does it mean for CPI going forward?
Look, I'm hoping there's more to come in terms of that number coming down. So at that 18%, certainly it appears to have been at the peak. A lot of that drive from 18 to 16%. If you look at the components, they all are energy related, which fits into the oil price. So we are seeing the oil price come down, which is nice, not only from a PPI point of view, but also from a CPI point of view. And if you look at the next petrol price adjustment, it is likely to be lower. Again, a reflection of the oil prices coming down. So hopefully in the next few months or so, that trend continues, which then bodes very, very well for CPI going forward. But I think on the CPI side, the one area that we continue to be concerned about is the energy prices. So if Eskom gets 32%, that picture can change very quickly, for the West.
Absolutely. Patrick, thank you very much for your time and insights there. Patrick Mathidi, he's the head of Equities at Aluwani Capital.